All right, we are live for the midweek morning check-in. And as always, looking forward to connecting. Excited to be back before you guys. Hope everyone is doing well. Hope everyone had a great extended holiday weekend and everything in between. But nevertheless, we have some very interesting and concerning information to talk about. And it has a lot to do with the uptick, the rumors, concerns, doubts of this current financial facade that's before our very eyes, all predicated on where Nvidia goes. And so Nvidia had the single largest correction of any major public traded company. But then again, it shouldn't be surprising because earlier this year they had the greatest surge of any company in US stock history. So we know what world we're living in, man. It's just very interesting time to say the least. But I know for a lot of people who have their entire hopes and dreams um, weighted in equities, definitely something to be concerned about. So we're going to talk about a couple things here and just try to see, where this is heading. Is it time, or will the Fed step in with that preemptive cut that everyone's expecting in the next couple weeks or so? So we'll see. But anyway, let me know if everything is flowing smoothly. Let me know if you guys can hear me. Let me know if the visuals is good. We want to make sure this is worth all of our time. And the most important thing is feel free to chime in the comment section, and so we can have a little back and forth. I try to answer as much as I can just to make sure I'm engaging with the public. And so give me a second here. Let me close a couple windows, make sure everything is flowing, and then we'll get right into it, man. Yeah, so it won't be long, but just want to check in and see what you guys are keeping your eyes on. And of course, there's a lot of other subjects, but for the most part, I'm heavily focused on the macro side of things as well as the financial sector in relation to how it will impact the average person from Main Street. And so, going to be a good day. Going to be a good day. All right. So before I dive forward, let me just do a little shout out and put out some resources for people who are interested in navigating these choppy and turbulent waters that we're all forced to play in, just because the concept of investing requires risk. But nevertheless, people don't really consider the type of risk that's at play right now. And I believe that what we're witnessing is just a tremors for some type of systemic event, which is inevitable. And so, as much as a lot of people tend to play on the optimistic approach of like, oh, markets are only down this 1%, 2% here. When you zoom out, you see a continuous downward trajectory, unless the government spends, unless the government borrows and brings new currency into existence. The markets can't trend up because, once again, it's all predicated on expansion of the monetary base, and that ultimately dilutes our purchasing power, makes life very expensive. You know the trick. Okay, it's called financial repression. That's ultimately the goal of the powers that be, because they need to provide the illusion that people are prospering while they themselves are taking some off the top, the bottom, and everything in between. And everybody else is forced to live off crumbs. So, got an interesting index as well about the uptick in people, I guess, being forced to take on more than one job these days. And I got thoughts on that, so I'll save it. But anyway, so before I move forward, majority of these things we can't control, but you can pay attention, watch, listen, and learn, and try to do what's best for you and your household, because you better believe none of these financial products that I'm going to talk about today are insured. So that means you're responsible for your own financial future in the short term as well as in the long term. And that's why I want to continue to remind my people. colonialsmetalsgroup.com/RTD are my partners here. Had a chance to connect with Paul Stone, the owner, the other day. Gave a great deep dive into what he expects with the potential victory of the Democratic Party in the Senate as well as in the White House. And they will roll out some very draconian type of taxation measures outside of what we already have. So you better expect to have to do some adjusting with your portfolios of all kinds. But here we have the opportunity for people to take possession of their retirements, put it in their own holdings, whether it be in your own vault or in a depository nearby you, so that you can actually have something tangible, gold and silver, which, despite all of this, is doing quite well because they are the mediums that everything else is based upon, because they are money. And so if you guys are interested in finding out more about a self-directed IRA, I encourage you, fill out this short form here. You'll be contacted by the experts, ask questions, find out what fits you best, and basically get in a position to protect and preserve everything that you work so hard for as far as your retirement. So as you can see on the screen here, colonialsmetalsgroup.com/RTD, or you can give them a call, 888-521-2448, and just get your questions answered. And just literally, it's time was yesterday to actually begin taking steps towards preserving your future. So hopefully you guys take advantage of it. And that's just one method there for those who are wanting to take what's already theirs. And next here, really focus on what I can control, and that is the RTD Silver team. And so right here on the screen, we have some individuals that are a part of the silver community. And this is the average Joe, taking 1 ounce at a time, adding it to their stack, i.e. their savings, and they're attempting to protect and preserve their future. So as you can see on the screen here, a lot of people are holding up their prized possessions, which is their stacks. And once again, it's not about the size of it. It's about being proactive and actually doing something to actually protect and preserve everything you work hard for. So if you're interested in finding out more about the silver team, links in the description, or just go to mysilverteam.com and you can get all the information you need there to join me and partner with me and help me put silver into people's hands. That's my job. And that's what excites me most at this current moment, because can't control Nvidia. I'm not privy enough to be inside of those operations there. And I wasn't, I guess, wise enough 6 years ago to buy in when it was low. And I'm definitely not buying in now when it's overpriced. So I'll wait till everything calms off and then I'll look for opportunities in the short term. But that's kind of what we have available now for those who are plugged in, man. Okay, so volatility is up, it's ticking upward. And so let's just jump right into it. Let me move some things around here so I can see what's going on here. Give me 1 second here. Let's just jump right in, man. Let me get my windows open. All right, here we go. All right, so the volatility index, as you can see here, this is just a zoomed out view, but whenever there's concerns in the financial realm, there's the tremors that start before the correction. So as we can see here, this is the 1 day, then we got the 1 week, and then we got the 1 month, and so forth. But as you can see here, we're starting to tick upward just slightly. And so as of right now, let's just look at the hour. So as of now on the hour, we're coming down off that 2288, which was yesterday, or early day rather. And so things appear to be of concern to a lot of people out here in the investment world. And so these are things that traders pay attention to, because technical analysis and stuff like that, when there's concerns, the charts move in a little bit of a different way. And so if you're not trading right now, you're definitely not investing, because all this stuff is predicated on monetary policy. And if the monetary base don't expand, then stocks can't continue to go up. So is that really investing? Because they distorted the market so much these days. So we'll have to just pay attention to these. But let's just zoom out and show you how. Let's go out 5 years. So this is the 5-year chart. And we can see the last time there was a surge, that was in 2020. And we all know what happened in 2020 and the amount of fear that was in the market. So nowhere near there. But then again, we're nowhere near the bottom of this either. So something to pay attention to. But what caught my attention was the fact that right now on X, what's trending? This is what's trending. Market wiped out 1 trillion from U.S. stocks. And so U.S. stock market loses over $1 trillion. And so these are just some graphs that people put up here and paints a very unpleasant picture as to what's happening out here. And so as you can see, yesterday, Nvidia, 300 billion wiped off Nvidia's market cap today. This was yesterday. The biggest single day fall in market cap history ever. So once again, if Nvidia is the golden child for our financial system, based upon the way the system is set up, with stocks being the bulk of everyone's portfolios, when it's doing well, everything is hunky-dory. When it's doing bad, all hell is subject to break loose. And as of right now, I don't think there will be much to this, just because it's still early. This is before the presidential election. You better believe before things get out of hand, there's going to be some rescuing of some kind. But just a couple things that's trending about the current concerns of today. Here's something from Genevieve. Good morning. The Japanese stock market dropped 4% overnight. Remember last month's 12% plunge, the biggest drop since 1987. Yesterday, 1 trillion cap wiped off the S&P, and the VIX is up 39% in just 5 days. Here we go again. So this is from an hour ago. So once again, people who pay close attention to these markets are concerned. And a lot of people suspect that Nvidia gets antitrust subpoena from the Department of Justice. This is a good reason why markets sold off the way they did yesterday. But we're going to dive further into that. And so as of right now, as I zoom into the S&P, Nvidia is only down less than a point, but Apple right now is having some tremors, 2% in a world where everything is closely focused on the tech space or the Magnificent Seven. 2% is starting to add up, because that 2% equals billions that are transferred out of the hands of those who were holding into those that were shorting. And so we'll see how things plan out, but let's just move right along. And so Magnificent Seven, that is what everything is hinging on. Erase 550 from the market cap. Yeah. Okay. All right. So let's look at who took some losses. Nvidia slide wipes $10 billion from the CEO Jensen's fortune as sell-off continues in pre-market. So this was 3 hours ago. So literally, this guy I saw, based upon his position, he controls millions of shares in Nvidia. And I want to say I saw at the peak, it was $131 billion, I think was his total worth in reference to his share prices that he holds. So to lose $10 billion in a single day is a lot. But then again, he's been dollar cost averaging out of his position. So he's probably sitting on, buku billions in actual cash on hand. So he's not going to be hurting, but it's just the average mom and pop that might be allocated into Nvidia and the other Magnificent Seven, because that's where all the hype and the hope has been for the last, 4 years that we've been in this new monetary reality since the health event that brought about $5 to $6 trillion, which has found its way into a variety of pockets. And of course, metals, in particular gold, globally has really indicated the dangers that the fiat game is experiencing. Because what I'm really going to focus on moving forward is the continual debasement of fiat currencies, because right now there's a currency crisis at play right now. Like, I just finished working on a video about Argentina, and they're about to launch a 20,000 peso note. And the reason, because I have a 100 peso note, and 10 years ago when I was there, this was the biggest note they had. It was 100 pesos, and at that time, it had a value of about $20 to me, maybe $30. So I was just, recounting some of my, went to the movies or whatever. And, all that was under 100 pesos. But now, because the currency has lost basically 99% of its purchasing power when measured against gold, the people are losing heavily. But then again, here in the U.S., when measured against gold, the Federal Reserve note, when measured against gold, over the last, 5 years, has lost close to 40% of its purchasing power. So we need to focus on the metric in which we use to gauge value. You can no longer use a Federal Reserve note, because that is the problem in and of itself. So depending upon this piece of paper or its digital representations, i.e. Federal Reserve digital coins, which are what we have in bank accounts, these are the problem that people will start to pay attention to. So I want to be very specific in how I use words, because I notice a lot of people in the commentary space talk about the dollar, the dollar, the dollar. The dollar as a whole, according to the way the country was founded, is doing fine. What do I mean? So right here, I have a silver dollar, or silver eagle, and on the back, on the back it says one United States, what does it say? $1. 1 ounce of fine silver, $1. So this too is $1. So these are not equal in nature. Two different substances, two different sources, two different outcomes. Depreciating, appreciating. So the dollar is doing just fine. The Federal Reserve note, on the other hand, that's where I gotta warn people. So anyway, that's just a little side note there for my people plugging in, just because I got really trying to figure out how to reach, people who don't quite understand it from that perspective. And let me just, as a reminder, give me a second here. I just forgot, because I have resources. I have resources to get to people. If you go to, because I never know who's new. That's why I want to make sure I give everybody a fresh and a clean chance to get the information. So let me just show on the screen here, because these visual aids that I put together are for the purpose of educating people, but I forget to mention them sometimes, just because I've done so many of them. So if you go to rethinkingthedollar.com/dollarcation, and I put together some very valuable visual aids here, which encompasses our entire monetary structure. And so the very first one here, the dollarcation chart, this one here gives a lot of details into the history of the dollar. And ultimately, it boils down to the fact that all dollars are not created equal. And so go to rethinkingthedollar.com/dollarcation, and you can download this and learn. Share this with other family and friends so they'll know what's up. Because ultimately, once they wake up, they'll be heading to the exit, just like I encourage people to do when you let me get this. When you redeem these notes, which is what they were meant to do. But the redemption is on you, buddy. Okay, so that's just a little side note. Okay, let's keep it moving. I don't want to bore you guys, but I also got to keep people mindful of what's out there for them. Okay, so how much of this Nvidia scare has to do with this subpoena? I don't know. We'll find out. But once again, I'd imagine the DOJ has to look into their concerns as to how impactful and how powerful one single company has become. And then you factor in this Nvidia, their primary income source only comes from 4 or 5 different companies. So it seemed like it's an inside job they're working here, because even though the chip maker, AI robotics is the future, it can't be centered around 1 or 2 companies. That's not something that is healthy. But Nvidia has been subpoenaed by the Department of Justice in its antitrust probe. So let's just dive in here. It says, a week after reporting another record quarter, chipmaker Nvidia has reportedly been subpoenaed by the U.S. Department of Justice. It says the subpoenaed other companies for evidence after initially sending questionnaires about Nvidia's business practices. Bloomberg reported, citing unnamed people familiar with the matter. It says the FTC reached a deal to carry out antitrust investigations to Nvidia and fellow artificial intelligence industry leaders, Microsoft and OpenAI. U.S. officials are reportedly concerned by complaints that include how Nvidia has made it difficult for customers to switch chip providers. Nvidia and Justice Department have both declined comment. So literally, with the size of Nvidia, they have cornered the market to where there's not much competition. So therefore, the good old government got to come in and regulate things and poke their nose in things, trying to make it appear to be more fair and more equitably distributed amongst the population, as far as giving other companies a chance to, profit off of this technological revolution that we're all experiencing. So I don't know where to go, but we'll see. But for the most part, all eyes will be on the Federal Reserve this month and what they're going to do, whether they'll cut and how much, and the impact it'll have, when the lagging effect, actually kicks in. Beginning of 2025 is when we'll see the repercussions of their actions on not raising high enough and or probably holding rates higher for longer. But then again, they're going to go back up. once this market is fully revealed for what it is, which is just a lot of hot air and a lot of froth, as one of the community members mentioned the other day. So just something to pay attention to. But let's get into some other details here, man. So what's his name? The global markets investor did a good job of highlighting some interesting information that I thought was worth bringing to your attention. So here we have U.S. markets, manufacturing activity is set to contract further. That's not a good sign. So the IMS manufacturing PMI has shrunk in 21 of the last 22 months, recording the second longest recession in history. So recording the second longest recession in history. But we're not in a recession, according to the mainstream media. New orders, less inventories fail in August, implying that manufacturing PMI will drop to its lowest since COVID. So as you can see on this chart here, the little rectangle there signals that things are trending downward, unfortunately. And yeah, that's just something to keep in mind, because the less activity when it comes to the producers manufacturing index, that means they're not producing as much. Therefore, what they do have, they got to get rid of. So costs will come down. Therefore, the inventory that will be shipped to the box stores eventually will either be marked down as well, or companies will stop taking orders and they'll just use what the inventory they do have. But then all this is happening going into the holiday season of Christmas in 3 months. So once again, just not good indicators to a healthy economy that they would like us to believe that we are in. So just more of the truth revealing itself in graphs. But it doesn't stop there. Here's another interesting graph, which hints at the real state of employment. Here we have U.S. multiple job holders hit an all-time record. It says the number of Americans working 2 full-time jobs hits 464,000 in July. So once again, you take that little rectangle, you see the trajectory of more people taking on employment, which ultimately boils down to more people in need of currency to sustain themselves or just to get by with what they do have currently. And herein lies the problem that I kind of hinted at earlier. And so because of the monetary experiment that's unraveling, people don't realize that a lot of the pain or tightness in their budgets that they're feeling as a result of the cost of everything increasing is not a employment thing directly, because whatever they're earning wage wise, was never really meant overall to provide for their livelihoods completely. And so it is the result of financial repression, as well as the collaboration of central banking and our government, that has led to the bankrupting of our country, which has suppressed and basically hollowed out and depleted the working class and their ability to work, earn, and save. And the result of all of that is tied directly to the currency. So the Federal Reserve note right now is the reason why people, not on, probably not on average, but small median, are experiencing a little bit of tightness. And so their natural response is, I have to go earn more. And so that means they're going to take more of their time and try to go exchange that time for more Federal Reserve notes at the same time. In the next couple of weeks, when the Federal Reserve decides to cut, that is the cue for more currency creation, i.e. through borrowing. And so commercial banks might lend a little bit more to those that are credit worthy. And then the government is going to continue to borrow. I think, I saw the deficit, I think saw some about $3 trillion or something as of now. And that's, they need 3, 4, 5 more just to pay bills on what's already been issued. So they're going to expand the monetary base that much more. Therefore, more currency will be created and eventually make its way into Main Street, where prices will show the amount of currency that was created, and CPI, inflation, will continue to trend upwards. So that person who has the second job will eventually, a year or two from now, find out that currency in a time they're spent wasn't really worth it, because if you're solely basing your financial future on a piece of paper that's being eroded away, you're going to always have a shortfall. That's why it's important to think outside of the Federal Reserve note system and think about how to protect, preserve, and to prosper in the days ahead. So in this current environment, in my humble opinion, you have to speculate in order to get ahead, because there's not enough time in the day for you to trade, for you to be able to earn enough of these Federal Reserve notes. So you got to do something that'll give you 2, 3, 4, 5 times the ability to accumulate these things, so that you can stay ahead of inflation and or use some of that excess to get out of the fiat world and into something stable. And of course, we see what gold is doing. Silver has yet to, touch that. But once again, there's other ways to speculate for each in his own, how they tend to navigate these waters. So that's just something that people should really consider, because the time is ticking and literally we're in. So let me highlight a little bit for those. So feel free. What's the best way to invest in bricks? Zinc. The best way to invest in the bricks, based upon the first thing that come to my mind. Let me share something with you. The BRIC nations make up a good chunk of all of the real world resources. And so the very first thing that comes to my mind in how to invest in the BRICS would more so look for opportunities to invest in companies and or jurisdictions. You can actually invest in companies within jurisdictions if you're into the, in the emerging market sector or in the Eurasian area. You can actually have access to those markets to participate in companies that will benefit the BRICS nations directly, because they'll be looking to go into the ground, extract minerals as well as metals to bring into fruition whatever it is they're planning on building, because they're building out, the Chinese Silk Road, which requires resources. They need to feed billions of people, which requires resources. So tapping into companies that have direct exposure and own land rights to extract those resources will be the best way to invest in the BRICS, in my opinion. And it ultimately boils down to this here. On the screen here, you see the periodic table. Everything around me consists of real world wealth, because it's in the ground or in the air, depending on what it is, whether it's gas, solid, liquid, or whatever. All these minerals or elements here is what makes up our reality. So every aspect of our lives reside on this periodic table, and even the stuff that we may not even know about that they didn't put on here. But as you can see, you got the base metals, you got the rare earth metals, you have all the stuff around me. There's companies that specialize in each and every one of these blocks. You can go find out what the companies do, find out the health of the companies, where they're located at, and you can take, in my opinion, a couple pennies, a couple dollars here and there, and you can buy shares into these companies. Because as long as those companies are bringing this out the ground and the world needs them, those companies more than likely will be profitable, depending on what currency you're using. So that's just my 2 cents there. But first thing that came to my mind was the periodic table, and then looking for companies and jurisdictions that are friendly and actually going into the ground, getting those resources. So that's just an option there. So moving forward, I'll try to put some thoughts together and, do some research and, go that route as well. So one of my concerns with investing in companies in foreign jurisdictions is that, once again, depending on the environment we're in, different governments can rewrite the rules for foreign investment, and therefore, either locked in, trapped out, or they cash you out. So you never know. But that's just the potential upside as well as the risk that comes with investing or speculating, as Doug Casey would call it. So that's just something there. Okay, keep it moving. So feel free to throw out some other things. Says, what does the jobs report affect the market so much? The jobs report affects the market because the Federal Reserve 2 mandates is maximum employment and, the elasticity of our currency, i.e. through interest rate. So those 2 metrics there is everything they preach. And so their policies, meaning Jerome Powell and the FOMC, that board of people that no one seems to know, that controls the the rates of the borrowing rates of our currency. When they get together, they have to look at all those metrics to see the health of the economy. And so based upon the amount of based upon employment determines the amount of comfortability the average person has, therefore what they're willing to spend and what they earn and all those metrics associated with employment. And so when things are good, people are employed, people are spending, it's all hunky-dory. But yet when the currency base explodes the way it did in 2020, so that's 6 trillion out there, a lot of that currency made its way into people's wages. So people are earning a lot more. And the more they earned, the more they spent, therefore driving up the price of everyday goods. So that's a little bit of a problem there. So they need to cool things off. Therefore, they make decisions that will impact employment. So they tighten the markets up, i.e. QT. And what that does, it puts a stranglehold on borrowing, which then forces employers to have to tighten the ship a little bit because they usually borrow in advance in order to make bills and stuff like that. So if it's more expensive for them to borrow, they then have to rethink how they're going to maneuver in order to remain profitable. So they then look at probably cutting down on a little bit of labor or asking more of their employees, or what we're witnessing now from the videos I've done in the past, we're experiencing literally a salaried employment apocalypse type of situation where GM, I'm in Detroit, so the big three are laying off, and all the tier 1, tier 2 suppliers around me, they're laying off big time because people aren't spending. People aren't going out and borrowing as much. There's no need to buy a car every single year. We make too much of stuff that's not even necessary, which means companies have to lay off. So that's a part of the reason why they pay attention to employment, because they want people to spend as much. The more people spend, the greater the chance of inflation, i.e. prices going up. And the less people spend, the more likely the prices of things will come down. So that's just, how the micro economy works, but on a grander scale in a sense. So, because every country's in the same boat. So hopefully that answered your question there. Feel free to throw out another one as well. And if you guys have not, show your support, hit that thumbs up button. Definitely goes a long way. And make sure you guys subscribe so you'll always be plugged in on the live stream. So just a little something there. Okay, so let's keep it moving. What else we got here? Let's just real quick. I'm going to check in on the metals and see what we have. Not that it matters, but then again, it's always good to keep your eye on the fiat Federal Reserve price of metals, because that always provides a redemption opportunity. So for those who came in late, I mentioned about the importance of you redeeming these notes here, because if you don't, the last person holding these always loses out, i.e. just look at all the other countries, the 99.99% of fiat currencies that have failed were due to people not realizing that they were the problem and acting ahead of time. So as of now, it looks like, based upon, concerns in the equity space or the debt market, you name it, gold and silver is in the green. So once again, it's $28.31 for an ounce and $24.97 for an ounce of gold. But then again, you got the premium on top. So I'm seeing gold eagles close to $2,600. And that lets us know how stable the gold dollar is. And so let me share with you exactly what I mean. And then I'll end with this. I'm about to release a video on Argentina and how their currency is literally failing in real time. So it'll be my 4th hyperinflation that I experience and document it in real time as it unfolds. So if it's happened to, we got Venezuela, Argentina, we got Venezuela, Zimbabwe, what's the other country that I was following? In the Middle East. Not Syria. Syria as well. Syria, yeah, okay. Syria. The bordering state, Jordan. I think it's Jordan. I think no. Anyway, so and now in Argentina, so that's 5. That'd be 5 countries that I witness in real time. But real quick, let me share with you here what I'm referring to. So here on the screen, just to show you how gold and silver, they don't perform. It's the currencies that we use to give gold and silver a price. That's the performance. So if you look at gold right now, when measured in USD terms, i.e. Federal Reserve note terms, or FRN, let me be more specific. Gold, when measured in FRN, which stands for Federal Reserve notes, This is what we're looking at on the screen. And so from a dip where it was 1,800 Federal Reserve notes to almost, and next month, it'll be a year later, it has increased by 28.35% in 1 year, referring to the gold dollar. Just one $50 gold coin. And so if we reverse that, this is how the Federal Reserve note has performed against the gold dollar. So literally, so if we put FRN right here for Federal Reserve note when measured in gold, from the same time period when it actually appreciated against gold, it went up, as you can see here, to 0.0005. We can say 0.0005 of a cent. Okay. And since then, the Federal Reserve note has underperformed severely, meaning that our currency has depreciated when measured in gold by 22.27% within a single year as of October 4th next month. And so this is currency crisis in real time when measured in gold. So this is 22%. And let me share with you what Argentina is in just the last year. So in the last year, the Argentinian peso, and mind you, I got 100 pesos right here that now is worth 0.001 of a peso, not even worth a U.S. penny. And when I exchanged my Federal Reserve notes for this was worth $20 when I first got this note in Argentina. And so, as we can see here, over the last year, the Argentinian peso has fell off a cliff, literally, by 71.40%. So, moral of the story is, the more paper you hold long term, and if they're not circulating and working on your behalf, you're losing out. So, do with that whatever you must. And I'm gonna leave it at that. But one thing I'm gonna focus on is encouraging people to get their weight up and learning how to maneuver within a new paradigm, thinking outside of Federal Reserve notes. So, what I'm doing, I'm actually working and partnering with a couple of different, companies to try to bring options to people. So, what excites me most, as I mentioned, is the silver team. And so literally, it's the most easiest way to auto ship your silver to your house and get something that you can hold. And so as you can see here, people are collecting, at a minimum, you can do 1 ounce a month. 1 ounce a month shipped to your home puts you on a nice insurance plan against a depreciating Federal Reserve note. And so if you guys are interested, click the link in the description, mysilverteam.com, and you'll have a chance to join the team, work with me directly, and automate your shipment, automate your silver, and then help others. That's where you get a chance to earn Federal Reserve notes that you then can turn into more silver. So, getting into the silver business, it's my opinion that everybody who stack and recognize the currency crisis we're in, you should be in the metals game somehow, some way. So I got a couple of other opportunities I'm about to bring to you guys as well. So if you're interested, the opportunity is there. So you can either exchange more time and not have a chance to earn enough of these, or you can help people and then earn these and turn them into silver. Yeah. But anyway, hope all is well, good people. Be blessed, be safe. I will see you guys later. Shalom.